Good morning, everybody, and we have the breakout on the SP 500. So we were ranging most of last week, and we'll fine-tune these levels later, but we've got a breakthrough through 4900 fairly aggressively as well. Thing that concerns me is obviously we are overbought, and today is a big earnings day. So a lot of the FANG stocks today, and I think Thursday is the other big day. So that's the thing that we need to worry about. And then we also have the Feds as well. So the Feds are also busy with some song and dances. So anyway, breakout. One thing that is very, very clear, it is a flat top triangle breakout. So logic dictates that we should be moving in a measured move as follows. And now the thing is, there's no structure to the left at the moment, right? So we are at all-time highs. So this setup is targeting 5,000. Now 5,000 is a big juicy number, and 3 years ago we were on our way to it before crashing down. So that to me is the most logical setup at the moment. And then you also have 4950, which is another round number. And I'm just going to, that's good enough. So those are levels that you need to have to the upside. And obviously you need to have this 4900 in to the downside. Now, yes, we start drilling through the time frames. And you can see most last week just forming a triangle, then we just like drifted, and then a massive breakthrough. And this is purely because there would have been a lot of people here sitting in the shorts, and they would have had stops up here. So that's what that is. I don't see any noise, anything that led to this breakout, but that's typical when you break through structure that has been well defended over well, in this case it was a week, and I think we touched it again time in the past as well. So quite simple, we are looking for opportunities to buy still, and what we're looking for is to buy off structure. Now this to me could very well be an exhaustion bar, and we'd look for some move back. But now don't forget to hit that like button. The most logical space is down here at 4900. So patience is key. Patience is really, really key. If you did get in down the bottom here, and I'll show you now, there was a pin bar here which was fairly clear, and we got an inside bar, and then we got an engulfing bar on the hour. So there was definitely an opportunity to jump in here. And if you drop down to the 15 minutes, you can see it's also a 15-minute pin bar, and you can see there was an entry, and then here was another entry, and this was at the open. So if you just waited for the open, that was your entry there. Jump in, stop below the trend line, or even stop below the low of the day, which would have been 179 points. Fairly decent risk to reward, and 360 point gain. So for me at the moment, we can't jump in long at the top there. That does not work for me. We need to wait for some structure. We need to wait for a pullback. So the first pullback I would be interested in would be 4900. This move is fairly strong, so it is possible that that does not materialize. Or basically what that means is I need to wait for a pullback. I need to wait for that structure and then a move to the upside. Now just bear in mind, there are what I refer to as Brooks gaps. Some people refer to them as order blocks. There's a whole lot of different ways of looking at it, but the price action logic is quite sound. If you look at normal price action, let's just find something that's kind of normal. Give me one sec, guys. Yeah, this is kind of normal. So what happens is when you get a tail and you see the body come past the tail, you typically see price come back to test the tail there. Now if I put my cursor on that, you can see it missed it, but that's typically what happens. If you look at that tail, it also tried to come back. But structured price action basically breaks through a bar and then goes back and tests the tail of that bar. And true's nuts, there's nothing here which is indicating normal price action. It's all this kind of stuff which is where you see the gaps. And the gaps are, if I look at this bar, you can see there's my tail. Let's move the cursor across. Now you see the next bar is broken through. Now what should happen is this bar, next bar, should actually come back and test this tail. And you can see sometimes it works, there it does, and then often it doesn't. And some people refer to that as an order block. I refer to it just as a Brooks gap because Al Brooks is the one that taught it to me, so I'll credit it to him. But basically what it means is that in that 1 bar time frame, so we're on the 15 minutes, so in this 15-minute block, price came back, closed all the gaps, and then went up. The next one opened on its low, closed on its high, and then next bar opened on its high, its low, closed on its high. So this is just people that have orders at different prices, which is just driving price up and not getting the opportunity to come back and build structure. So the principle of jumping in on the retest, when you look at the chart like this and we say, right, that's the closest area for a retest, that is exactly the same thing that's happening inside these 50-minute blocks. So what you're seeing there is sort of what you're seeing in the bigger picture here is summed up into these little bars, and that goes all the way down to nanosecond time frame for some of the high frequency traders. So anyway, pay attention to it, because when you see like that, that's just basically lots of stops here which would have triggered this to the upside. I think it would have been buying. This is just stops being triggered to the upside. Now what you need to see is if this is going to hold. Now you've got all the big earnings starting this week, so there is potential that somebody knows something and bought into something. I haven't had a chance to look at it yet, but there's also the potential that this was just a break and this is just all the stops being triggered. So I would want to see the pullback. Now the pullback is at 4,900, but as I said, very difficult to pick that up, so you may want to just wait for structure. So in other words, it'd be a range, break through the range, come back and test the top of the range, which will be somewhere in this area of 49.30, and then your stop will be below the range, and then you'll be looking for the next level higher, which is 49.50. Okay, that's kind of my view at the moment. Bear in mind that we're coming up to the close of the month, and this is another monthly bar. That's 3 green months in a row, and we're far off from the weekly, but that is fairly strong as well. So yeah, just wait for the pullback. I think that's going to be the closest opportunity you're going to find, is wait for a pullback. And if you look at the daily, that does look like an exhaustion bar. Sort of we're rejecting, and then an exhaustion bar pass. So I'd be very reluctant jumping in long at the top. Wait for the pullbacks on the lower time frames. Wait for confirmation, being an inside bar, engulfing bar, double bottom, or pin bar, and then take your trade to the upside. You're not looking to short, you're just going to get burnt. So you want to go with the flow. The flow is up, so just wait for that pullback. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.